The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the December 22nd, terrific Thursday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure that you and I do everything we can to have an extraordinary one. Of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go look at the circumstances of the bulls and the bears, the buyers and the sellers. We'll go figure out what they're communicating to you and I as of about just past 1 o'clock in the afternoon on this wonderful day of December 22nd. I want you to know, though, I'm absolutely grateful for your presence here. More importantly, I'm here to serve you. So feel free, pick up that phone, dial on in, 877-927-6648. Internationally, 727-445-1044. Hey, look, I understand the nerves and the anxiety involved with calling into a radio talk show. When I call into a talk show, I still get those nerves. It's easier to actually do a show than it is to call in. But go ahead, call it in. You and I, we can go ahead and take a look at whatever market it is that you're trading. We'll go try to figure out what it is that that market is communicating to you. And we'll do that on this terrific Tuesday. And, of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got the Dow trading up 129 points. She's trading at 17,380. S&P is up about 12 points. That's trading at 2,032. NASDAQ Composite up 13 points, trading at 49.81. Russell's up 4 points, trading 11.32. Gold is down $7. Silver's off 3 pennies. Light sweet crude is up 55 cents. Leading the charge here to the upside, only $4, 4.44. Granger WW up a couple of percent. Tableau Software up 5%, $4.38. Western Gas up 3.76. To the downside, Chipotle getting hit off $22. Order your burrito. I've only eaten there a couple of times. But I would say next time you order your burrito, say, may I have one burrito? No E. coli, please. Of course, you've got E Plus Inc. That's trading up $10. That's 9% to the upside. Priceline, no, it's down 10%, I should say. Excuse me. Intercept Pharmaceuticals off about $7, down 4.5%. So let's get this party started out here. Now, this is kind of interesting. If I put up both, I will put up on the 2-hour chart out here. Now, yesterday, of course, we covered this, right? We said, what were the odds that the market is going to close higher than it did on Friday's close? And both you and I know that the odds were, what is it, like 67% is my recollection, 67, 68% odds. And then, of course, I said, what are the odds that next week the market closes higher than it does this close on Thursday? So Thursday, the market closes at 1 p.m. 75% chance out there. And, of course, my suggestion to you was don't be short this market. However, we gave specific parameters. Those specific parameters were 2011.25 to be exact inside the ES Mini. She is trading at 2023.25. This is not the time to be short. Now, the market may be getting ready to stall. We may even be seeing the market getting ready to go ahead and pull back as because I just got back from Whoville. And so, I saw the Grinch, kind of sneaking around. I think he wanted to come down from his hill out there and try to be the spoiler inside of the markets out here. We'll see if the Grinch is going to be able to do that. But we've got probabilities on our side. That's why my newsletter is called Mastering Probability. because that's really what this game is all about that you and I play out here. That's why we take a look at these patterns. That's why we take a look at these different levels of support and resistance. It's why we use multiple tools to help us identify what the market is doing. Some of those are just simply what the historical patterns of the market are. It's amazing how, in your life, the way that the past does not equal the future. But in the market's life, oftentimes the past does equal the future. And that's where you and I use that to our advantage. Now, what's interesting as we begin the show here at 1 o'clock on December 22nd, if I take a look at the Dow, up 117 points right now, what we're going to see is off of the low out here from about the close. This is on December 18th. I think that might have been Friday. So off of the low out here, we can see that we are now in wave number 7. Wave number 7 is oftentimes where you see the end of a move out here. Why do I say that? Because I know that to be the case. Doesn't mean that it has to work out that way. You prefer to see price moving higher or lower with less or more relative strength or weakness out there. In this case here, the last bottom that was made, you and I took a look at that yesterday. That was at 12 noon. That was on December 14th. That was the bottom that my clients and I went ahead and bought. The Dow futures never made it up to a 7th wave as it made the top. The ES Mini did, though. And as prices now move back up, we made 100% move. That just means we get back to where the last swing point was, swing point area. You might say, what's a swing point? Because you can see a number of them out here. We're looking for those major intersections where the market goes ahead and reverses. So makes 100% move. Right now you're in wave number 7, and you're really right up at resistance. Not necessarily a good sign. At that resistance level, it becomes a better sign if the Dow futures can close above 17,298. You are at 17,282. So you got about 17 more points. Now, this 2-hour candle, just because we're in it right now, doesn't mean that's it. It has to form. This, if we see successive higher highs out there, it just extends that. But what I am saying, what I am suggesting is the market is starting to get to a little bit of an extended area. Now, just to put things in perspective and actually how weak the market is, but it's doing what it's supposed to do this time of the year. Take a look at the move here last time from, well, you can just do it from the bottom, from the top to the bottom out here. The top to get to that 7th wave move, that began at about 4 o'clock in the morning on December the 2nd. So it went from December the 2nd, take a look at that, was a price point at the 17,800 level down into about the 17,081. So you're looking at about 700 to 800 points out there. Here we're just going in, and that's where it made those 7th wave moves out here. Here we just simply have gone from a price point of about 17,000 to 17,288. So it's a time to be careful out there. If you were long this market, I would just simply adjust my stop. That's what I would do out there. And the reason is, now that's the only signal that we have so far. Let's take a look at both bullish and bearish signals out here, because we do have some contradiction of signals. And so when you get that, that's where you start to maybe say neutral-ish, so to speak. If we look at the ES Mini out here, we're going to see the same thing. We are in wave number 7 to the upside, and we're trading right at about the TAS market profile high. You might say, what are those TAS market profiles? What they are, folks, is they're speed bumps. They are areas of, it's like driving down the expressway, best that I can say it, driving certain streets or roads, not steep roads, but driving certain streets or roads where you know that typically you're going to run into traffic. Or maybe you're driving down the expressway. Maybe you're going to Granny's house this weekend, wherever it is you might be going. And, you get that sign that's in the expressway says, 20 miles to this exit is going to take you 18 minutes to get there. That sign's pretty cool. It's the one that says 2 lanes up ahead are closed. 2 of the 3 that you're in. Now you know you're going to run into some real traffic. We can take a look at those traffic patterns inside our charts out here, and one of those tools are using our TAS market profiles. Right now, what the ES Mini is up against, it's up against one of those lane closures, so to speak. However, if it can close as we come into the 2 o'clock time frame above 2022, you're at 2023.50 right now, then price will continue to move higher. It'll just extend that 7th wave move to the upside. Now it's bullish out here, but cautious. Bullish but cautious. Why do I say cautious? Really because of those 2 7th waves. That's the only reason that I can find to be somewhat cautious in the market. Got our friend, yours and mine, Euro Japanese yen. And guess what? moving to the upside, so that's good. We've got wind at our back out here. If we go take a look at the VIX index, where's that trading at right now? Price point is 1718. And that is below the 50-day exponential moving average. 50-day exponential moving average is 1798. That is bullish out here. I would say the next level that the VIX needs to close below would be 1679. So that is another, 80, 20, another 39 cents away from where it's trading right now, give or take, 39 cents. If it closes below 1679, you should anticipate that, forget about those seventh wave moves. It's just simply going to do one of those nice wave patterns, wave and say, sayonara, see you later out there, alligator. And the VIX index will move all the way to 1453. I think that is the more likely outcome. But that doesn't mean that we don't have some kind of retracement in between now and, even tomorrow or something along those lines. Now and Thursday is what we'll call it. But everything here is really set up to continue to move higher. Now, we took a look at the 2-hour chart inside the S&P futures and the Dow futures. If we take a look at the NASDAQ out here, it really hasn't even gotten moved. That was just basically horrible grammar. It has not even begun to move out here as we take a look at the NQ. Now, what it is doing, though, it's trading above that little resistance zone of its TAS market profile. So 45.57 is the number to be paying attention to. If those seventh wave moves on the ES and the YM, the Dow futures start pulling back, and this gets below 45.57, that's going to signal a retracement. Retracement to where? Shoot, it could easily pull back to 45.31. But this is not geared up the same. It's really not. It has more opportunity to run to the upside, but it has far from, on the 2-hour chart inside the NASDAQ, it is far from giving us a outright bullish signal. Now, and again, we're just, these are difficult waters to navigate against during this time of the year, this week specifically, next week. It's why we try to take a look at the probabilities of what the market is going to do. We take a look at where the market is at. By the way, is there anybody out there that believes that there is any trend that has been broken? Do you believe that the trend is your friend? Do you? Do you really believe that the trend is your friend? If you do you believe there's an index that has broken its trend? Something to think about. If we go take a look at the summation index, if we take a look at the price oscillator for the New York Stock Exchange, the interesting thing is it's actually above the zero line. What does that mean to get above the zero line? Well, what it means is we take a look at advancing and declining issues. When price gets above zero, when the oscillator gets above zero, tells you that buyers are in control. Now, in order, just kind of like the IBD has their follow-through days, well, these oscillators also have their follow-through days. So if the market closes right around here, or as long as the New York Stock Exchange oscillator closes above zero, if there's more follow-through to the upside tomorrow, well, that's a pretty good indication that the market could just simply continue to run higher through next week, through next Thursday. Yeah, New Year's Eve. But we got to deal with this Thursday and tomorrow on Terrific Tuesday. I'm your host, Steve Rhodes, and we'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. You know, as we went to break, we were looking at the New York Stock Exchange. That is set up in bullish formation out here. The NASDAQ Composite, not just yet. It needs more net advancing issues in order for its oscillator reading to get above zero. It's at minus 3.36. But the Dow, its oscillator is above zero out there. So that reading says it's in bullish configuration. So you got the New York Stock Exchange, bullish configuration. Dow Jones, bullish configuration. S&P 500, bullish configuration out here. We have the odds of the market finishing higher than it did on the close on Friday, 67% chance. So everything is really in line for this to continue, some type of gradual continued move higher inside of the markets. And that's why my suggestion to you is do not be short. Now, if we took a look at the 2-hour charts, that could be signaling to us some type of pullback. I don't think like it's the major high of the year. I just think it's an opportunity for the market to potentially begin to digest its gains. It doesn't have to start today. It doesn't have to start this afternoon. Maybe it's an overnight action. It just says, you know, depending on what it is that you're trading, be careful out there. If we take a look at what's going on inside the some of the other markets out here, if we look at gold, really not doing a whole heck of a lot. It's trading at 1074, a decent move yesterday, a decent move the day before. We've got an inside day going on. What's that mean? It means we're trading with inside yesterday's candle. Yesterday's high was 1081, today's high 1080. So it's really just like hitting the pause button. In the pause button, you want to go get some goodies out of the kitchen. to watch the rest of the football game out there. That's really all that it's doing. The rest of the football game inside the gold contract says that it should move and find pretty good resistance. So if you and I were driving down the gold road out here, we were following the yellow brick road, I can tell you that there's a sign that is flashing, that's overhead that says you're clear until you get to the price point of 1091. 1091, 1089 to 1091. Expect to find a lot of traffic there. And when it gets to that traffic, the question is going to be, are we going to be stopped at a dead standstill? I don't know the answer to that. Early yesterday, we were taking a look at this chart here, were we not? We were looking at the consolidation pattern inside gold, that 45-point consolidation pattern inside of gold. Looks like it's pulled back on the 2-hour chart right into a level of resistance, which is really now support. It used to be resistance. It's pulled back into that 1073 area. It looks to me like gold is getting ready to make that next move into that major congestion zone. The 1081, something right around that level is where it looks like gold probably peters out. Now, if it can close above that and it breaks through that kind of traffic, that's a good thing. That would send price up into the 1104 and then 1117 area. But it's going to be a tough road ahead to get through that 1091 area. Now, that doesn't mean like that's it and it pulls back. We've been basically in a sideways consolidation mode inside of gold really ever since about November the 10th out there. So that's the larger consolidation. The smaller one, no, that's the small consolidation. That's basically from a 1090 level down into this 1050-ish type area. If we look at silver, trading basically flat, trade out at 1431 as we speak right now. This is the daily chart for silver. I've got the right contract and everything. It's got a level of resistance, which it basically is traded up into today. 1443 is resistance. It's been up to 1440, so that's close enough for our work. So we'll keep an eye on silver. Maybe silver gives us the first clue or message with regard to the metals, whether or not gold can bust through that congestion zone. If not, then you can expect silver to pull back to about 1413 to 1392, somewhere in that area, as it just builds up cause in order to go ahead and what I believe is move higher inside of the market. If we go take a look at the current futures contract for light sweet crude, trade out at 36.30. That's up 49 cents out here. What is it doing? Well, if we take a look at its market profiles, it's trading really right at support. What you should anticipate here is that light sweet crude will bounce up to about the 37.62 level. It's trading at 36.31 as we speak right now. So I would anticipate that light sweet crude will make it a run, give it a run, do something along those lines, and try to get up to that 37.62 level. People will get all giddy about it. You don't need to get all giddy about it. Just anticipate that is what it is likely to do, its next move out there. Natural gas back just a tad here after really having a nice trading session yesterday. Looks like natural gas, if it doesn't hold this level, that being $1.85, probably on its way back to $1.72. Steve Rhodes with TFNN. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on TigerTV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back. Dow is up 121 points right now. The answer to the question was no. There is nothing that has broken through its trend. Every index is trading above its trend line or its channel line. And I mean the Dow Transports. I mean the Russell 2000. I mean the New York Stock Exchange. I mean the Dow Jones Industrials. I mean all of them are trading above their trends. So if the trend is your friend, why are you trading against it? Don't be doing that. Do not be doing that. Not just yet. If you want to know the next time to go short, well, come on over. It's a great time to sign up for my newsletter service, Mastering Probability, because that time is coming. It's just not here, just not yet. And you can check out that newsletter service for the next 30 days out there. Let's take a look at some stocks here that are moving. Let's take a look at some stocks that are moving to the downside out here. See what's behind their moves, like Chipotle. CMG is the ticker symbol. That's taking out a swing point out here. I believe we have identified a couple areas of breakout levels inside of this. Let's go ahead and turn off some of our road maps, our market profiles out here. Let's take a look at the levels where Chipotle had broken out. So here's where Chipotle, technically speaking, is headed to out here. Of course, if they do not contain their E. coli problems, you know, all bets are off. But what Chipotle is doing is pulling back into a area that had wide price spread and accelerated volume that takes us all the way back into October 18th, 2013. So to the extent that you believe that the stock is a good stock. It's just one you want to have in your stocking, just not right yet. To the extent that you believe that they will figure out their food issues and that prices are going to head back up, even though it does have an island top reversal, but it's had several of those along the way. Then the area that you want to take a look at buying, I'm not recommending that you buy Chipotle, but if I was going to recommend it, I'd say, hey, wait for this to get back into the 442, 477 level. See if you can find some type of pattern down there that completes. See if you can find some type of sign of strength out there inside of Chipotle, because that is where a breakout began back in, if I didn't say that, October of 2013. So it's taken a couple years to get back into this level, but that should be some pretty good, strong support out there. Again, 442 to 477. To the downside, down about 10% here, a company called E Plus Inc. PLUS is the ticker symbol, but there is nothing to the plus side today. This is moving to the downside, volume behind the move, not too bad. This does not trade much, not a very liquid stock. I don't know what they do. When I say not very liquid today, it's traded 156,000 shares. Now, this thing had a breakout, back out a breakout party. I was not invited, but it broke out from the day before, which was November the 4th, 83 buckaroonies, and it traded all the way up to 109. That's quite a price move. It had nice volume inside that price move as well for this equity, 478,000 shares. So just putting it in perspective. Now we've got to know why it's moving lower. It's moving lower with less volume than that breakout area, but very likely this equity is going to come back and test the 84-ish range out here. It's trading 94.28. If it breaks through that area, then this thing probably pulls back into, I'd say, probably about the $73 range. PLUS is the ticker symbol. We've got Eagle Pharmaceuticals, EGRX is the ticker symbol. And that's trading out at 92.86. Let's go see what this thing is doing. 353,000 shares. Now, this has had some pretty nice moves off of. This thing had broken out back here around February 18, 2015. It was trading around 26 bucks. So in less than a month, this thing has made one heck of a nice run. Now, this has got some real resistance up at these levels here. So this is traded into this resistance zone right around the $104 level. Nice big old bearish engulfing candles. One on the trading day of August the 11th, another on the trading day of August the 6th out here, then another one recently on December 17th, and again here today. So the sellers are really lined up in this $104 area. Now, this thing had a nice sign of strength back here recently as well. That was on December 8th. Probably headed back into that low, which is around $83.73 out here. That's likely where it is headed to. If we look at, just look at a couple other things that are moving to the downside. Steel case, haven't looked at. Ooh, this thing is really moving to the downside, up 23%, down $4. Now, this thing is gapped down with volume. Looks like they were out with their numbers for their third quarter. Steel case Q3 revenue, $786 million versus an even $800 million from last year. So they're just not selling as many desks and drawers and accessories out here. Let's go see where this thing might be trading to. So big volume, already 5 million shares to the downside. And this is not a great looking chart here. Let me see if I put this on a weekly chart. When I say not a great looking chart, not a great, ooh, that doesn't look very good. So this thing makes a 100% move of a move. What do we mean by that? We mean that price got back into the range of a previous swing point. That previous swing point on a weekly basis takes you to April 23rd, 2007. It was priced out at about $20.72. Never hit it exactly, but you did on a weekly basis. It came very close. That was the week out here of that began March 23rd, 2015. Now we've got volume moving to the downside. I'm just trying to figure out where is this thing headed to. And if it goes much lower, that's going to be the low here the week of June 23rd, 2014. That's at a price point of $14.30. man, where is this thing going to head to? Maybe around the $12 area, and if it doesn't find support there, it moves all the way back and it makes a 100% movable move and gets back to the lows in September of 2011. Let's go out to Chicago and speak with Robert. Robert, thanks for calling. Thanks for holding. How are you doing this afternoon? Or this? This afternoon.
I'm good, Steve.
Excellent. You are our Whole Foods expert. So tell us what Whole Foods is doing.
Well, last week it went up, or I'm sorry, I don't know, last 2 or 3 weeks, somewhere between now and the last 2 or 3 weeks, went up to around, I thought it was around 34.15, 34.10, and today it's just kind of, I don't know, it's above it. I think it's up around 34.65. I was going to short it, but I think I'm wrong. But,
well, you're our expert.
What's your take on Whole Foods?
Okay. Well, let's look at a couple different things. Let's go see if we can figure out where there's some resistance areas that you could use as a place to potentially short it from. And the first area that pops up for my eyes is going to be this level right here where this thing had gapped down. This is the breakdown inside of Whole Foods, and that's at a price point of $36.70, and it is at $34.70 right now. So you've got $2, in my opinion, that you need to wait to see what happens at that level. Now, volume-wise, it's likely not going to have the volume as it approaches that area. Robert, on that day of July 30th, I imagine that was an earnings date. That gap down and had volume behind the move of 35 million shares. Now, those people that bought on that day, because there were buyers and sellers, probably thought there was value at the $36 level. And they probably didn't think like that was very good value when this thing got down to $28. So there is just a natural area of sellers out there. People just want to get their money back inside Whole Foods. So that would be the first spot that I would look at. If we take a look and we just go ahead and add our TAS profiles, let's go see what other things are out here. This happens to confirm what you and I just took a look at. And that says that it's weak. Well, this actually, there are no profiles that it is going to run into. It is trading above both its weekly and its daily profiles out here. And so I would say that you're too early because I don't see any congestion in the case of Whole Foods right now to say that now would be the time to short it. I think the first time where you should consider that becomes $36.70. I will also suggest to you, as I take a look at its price oscillator out here, I will tell you that it's now above zero. That day that you were talking about was last week. Let me just turn something off here. It was, there we go. The day that you were referring to, I believe, Robert, was had a nice big wide price spread on December the 11th out there, and it had pretty good volume, which was 18 million shares. And today, you've done 5 million shares. Trying to benchmark today, yesterday, next week's volume is a pretty dicey thing to do because we're nowhere in light trading out here. But it's as long as its price oscillator is above zero, that's when it's actually in its most bullish state, its most bullish configuration out here. And if my charts would take a look at the time period, if you watch this on TigerTV, October 31st, 2014. Remember, this thing had a big gap down that we can see. So similar to the pattern that we're trading into right now, but this thing had a big gap down on May 7th. And the volume there was 49 million shares to the downside, even more than what we're taking a look at. But see, when the price oscillator got above the zero mark, which looks like it took place right here on October 31st, 2014, this thing continued to move higher. In fact, it had a nice little sign of strength out here on November 6th as it was trading inside that gap. So it might actually be that you don't get a short type signal until it gets to the top of the gap, right around 40, 42. That's how I'm looking at this right now. It's similar to the trading pattern that was in Whole Foods back around November the 6th. But that's what I see. What else do you see?
No, so let me. So I wanted to short this thing back around that 34.05 or 34.10 that was just recently in the last 2 weeks. Maybe it was last week, and now maybe what I should be thinking about is buying this thing here and looking at a target of towards 40.
Well, that 36, it's just so hard to, I don't know if the risk reward is in. I mean, you've got to make that decision here. I wish that there were some better bottoming signals inside of Whole Foods, something down around that day of November 5th, or, where it was moving lower with less relative weakness or something like that out there. And it's not in the cards on this equity. So it's not as if we have. It's not as if we have like really great bottoming signals. We do not have great short signals. It does look so. It's just hard to say that where we anticipate this is going to get $2 out of it. The average true range on this today, it's already gone from a low of 33.50, and we're at 34. So it's already $1.25 or so today. I don't know if the risk reward is really there. Although you like playing Whole Foods, so I don't want to sway you from taking a trade here. I just think that trade was probably yesterday versus today. Sure,
and that's great. So 36.70, we have 35 million, or so that's that's going to be a hell of a lot of volume to get above.
It is. If you go back, just study the chart. I don't know what happened. I'd go probably Google the trading day of November 6th. Maybe that was an earnings date, and so that's why this thing had gapped up to the upside. But it seems to be following that pattern, whether that was an earnings date or not. And you really won't know until you see what happens at about 36.70 out there. So.
And so Steve, so when you don't see a bottoming pattern down around the 28, that area down there, it was hanging around a long time. And so when you don't see that bottoming pattern, do you expect it to revisit that soon?
No, not necessarily.
Okay.
It's just I would, if, I'm going to say there's probably an A to B equals CD pattern that completed. Yeah. So the bottoming pattern that did complete inside of Whole Foods is if we go from its high, Robert, back around October of 2013, October 28th, looks like around the $65 level, makes a beeline to the B point around 36.08 down around July 17th, makes almost a 0.618 retracement back around February 18th of 2015. Its one-to-one price projection was 28.34, somewhere right around there, guys. I don't think I caught the exact high, and the low so far, was right around 29.91. So it did complete a full move to the downside out there. Now that I take a look at the actual at that pattern, and there was a sign of strength coming off of the bottom. Okay, so the very first thing when you see any kind of market complete a pattern, especially one that's been hit like this, the very first thing that you want to find inside any equity, commodity, whatever it might be, you want to see some kind of sign of strength. And you picked that out. That was the day of December 11, 2015. So, from that standpoint, this says that, hey, things may be turning for Whole Foods. Did I confuse you?
No, not at all. Absolutely not. Great analysis, Steve. Thanks very much.
Well, only time will tell if it was great analysis, but that's what I. but at least that's what we see right now, and we do see a completed pattern to the downside, and there's just going to be some rough sledding at 36.70 to 40.42 out there. Whether it can get through that area or not, I'm not sure. But the answer to your question, I do not see a short today. No.
Okay, that's perfect, and thanks so much, Steve. It's great analysis, and it really clarifies things for me.
Okay, perfect. Keep us posted.
All right.
All right, that was Robert in Chicago. He is our Whole Foods expert, and we want to hear from you. Dow's up 154, S&P's up 14. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
It's true. Life is all about choices. At Everbank, they're making it easy for you to make a smart one with this special cash offer. Open a new yield pledge money market account with funds from another financial institution, or deposit new funds into an existing yield pledge money market account, and you could earn up to a $500 cash reward. And if you're opening a new account, you'll also get their new higher 6-month bonus interest rate, along with their yield pledge promise that ensures your yield will always be in the top 5% of competitive accounts at banks nationwide. Open a new account or add to one. It's your choice. To qualify, you must meet balance and other limited time offer requirements. Go to everbank.com/TFNN for details and deposit options, or speak with one of their banking specialists at 1-855-750-4051 for more information. You must act by December 31st, 2015 to be eligible. Everbank is a member FDIC.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back, folks. Dow's up 155, S&P is up 14. It's been a heck of a Santa Claus rally. Remember, you and I, we differentiate the Santa Claus rallies. We know that they begin sometime in the autumn. We don't wait. We know that the market makes bottoms in the autumn the majority of the time. In this case here, happened to be the September 29th low was that move out here. If we take a look at, just out of curiosity, price moves off of that bottom to the high. And now we're not near that high. That high, the most recent I came in on November 3rd. But that's really the big rally that was in place. Just curious how this rally compares to the last Santa Claus bottom, which was back here in October of 2014, and relatively close out here. The actual high that was made not too far above, you know, in essence, the high on this move out here. Now, back in December, coming into December 24th, December 26th, out here, we did see the Dow go ahead and make its final high of the year, and then it moved down right into the early part of February. So I think I'm giving you a hint. A clue is what to anticipate out here. So it's been a very healthy Santa Claus rally that's been in place. Of course, you and I know that we are best off not waiting until Thanksgiving for that rally to begin or 2 weeks before Christmas, for goodness sakes out there. We know that we just simply look for the market to make those highs in the October-ish type time frame. If we pull this back here and take a look at in 2013, the actual rally that unfolded, the true Santa Claus rally, and we come back to the low that was formed here October the 9th. It actually went ahead and it petered out, so to speak. December 31st, in essence, was when its high was, but a very similar move to what took place this time around, last time around, the time before that. Do you think maybe there's a reason to be focused on markets and their moves down into, usually from July, into September, October? Sometimes it even lasts till November. But the answer to that, it's obvious out here. But the markets have that same pattern behavior, and guess what? They have the same kind of pattern behavior when you get to the beginning of the year and things of that sort as well. So all we are seeing out here, and there's a lot of bah humbug, but the reality is that this this Santa Claus rally has been just as powerful, more powerful than 2 years ago, and just as powerful, very close to just as powerful as it was last year out here. What do we anticipate? What do you want to, and I anticipate? Well, one of the things that we anticipate is the market may be getting ready. Oh, I can't do that. I got to wait for this to close. But the market at this stage here, this is a 10-minute chart. We looked at a 2-hour chart earlier. The 10-minute chart here has been moving higher with less relative weakness out here. Even though it's got to wait for this bar here to close in order for this line to move up. Otherwise, I have to turn off a little strategy that is on this system out here. But on the 2-hour chart, moving higher. It's now moving higher with less relative weakness. It's just in that 7th wave move. Inside the 10-minute chart, it just says, hey, possibility that, anticipate the market to give back some of these gains here today. But it's not likely that this is the high of the highs out here and that the move higher is done with. That likely doesn't take place until sometime next week. I say likely, but at this stage of the game, everything points to bullish outcomes. So what does that mean? That means don't be short this market. So, folks, stay tuned. Oh, that's right. Our man David White is off today, but stay tuned anyways. I know we've got a great replay. And then from 3 to 5, we've got Tom O'Brien. And this being Terrific Tuesday, that means we've got Andy Heck to take it on home. So have a great Tuesday. Be safe out there, and I'll see you on wonderful Wednesday. Take care, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.